Here with a market update. Okay, so if you would have told anyone on Sunday when the US bombed Iran and the nuclear sites that in a couple of days' time, by Tuesday, that Trump would come out and say that the 12-day war is over and that we have an official ceasefire, you would have thought that you were crazy saying that, but here we are. Officially we have peace. So what does that all mean for markets? Well, obviously it means risk on, and risk on in a big way. So we've seen some very bullish moves. So going through the markets, equity markets first. We did talk quite a lot during the last couple of weeks when the war was going on about equities and about how, yes, they were trading risk off, but there were no big extreme moves lower in equities. So US equities, S&P for example, yes, it was down a little over like 100 points from before when the war started. So really it was, best way to describe it was just like a measured, controlled response. There was no real panic. The market really didn't want to sell this war. So yes, with obviously the headlines yesterday and with what's happened with the ceasefire, we have seen equities go straight back up, and S&P and Nasdaq yesterday just closed just shy away from making new record highs. So I would suggest it probably isn't long. Could happen tonight. The futures could do it during Asian time zone. But at some stage we are obviously going to take out and make new record highs in equities. And it is, I suggest it's hard to make a case at the moment, to sell equities. They seem to be, if they wouldn't go down on war, wouldn't go down on what's happened on tariffs, it's going to really need something left field to take equities lower. A lot of analysts for end of year have got targets for S&P up towards 6,500. Obviously it's a big psychological level as well, and probably is a realistic target if we don't have anything coming out again from left field between now and the end of the year. The only thing I can think about is potentially that could be a roadblock to any of this happening is US bond yields. So if US bond yields spike up for whatever reason, maybe inflation data comes out hot, and then also maybe on the back of what US debt worries, and also with the big beautiful bill that Trump's passing, if they come out and affect US bonds and that yields higher, that's about the only thing I can see at the moment that really could get equities lower. But anyway, we've got to wait to see that happen first. The markets that did react to the war, and that we did see probably the biggest extreme moves in the commodity space. Yes, crude did spike up towards $80 and the peak of the panic. But obviously when those peace headlines, ceasefire headlines came out, smashed back lower, back down towards $65 and even lower than when the war started. Goldman Sachs has come out and said that fair value for crude is around $65. So yes, I would not be chasing this move much lower. I'm not sure how much more we can get from this sell-off. Also, if we've got markets in risk-on mode, equities bullish, generally that is supportive of crude. So again, look, I wouldn't be selling crude, and chasing this move lower. Gold, look, yes, the peak of the panic, it did rally, spike up to 34.50. It did not go out and hit those record highs at 3,500 or make new record highs. And even from that, when it did spike up to those levels, gold only traded lower, and it was as if the gold market knew that this would end this way with peace. And at the moment, we've got gold sitting around 33.20. It marginally went through 3,300 last night. The new range on gold probably looks 32.50, 33.50 is probably where we're going to see most action. Yes, there is support around 3,200 and resistance from 33 up to 3,400. So, but imagine gold is not a one-way trade; it's a two-way trade. Nice ranges. So, for traders who like volatility and some good two-way action, certainly I imagine gold is going to present that. In the currency space, the US dollar was being sold off pre-war. We see dollar index cracking 100. US dollar is a safe haven during geopolitical crises, so we did see US dollar buying, and now we are going back to selling the US dollar. What does stand out is the risk currencies, namely the Aussie. The Aussie did trade down to around make lows at 63.80 earlier this week, but it's rallied all the way back up to 65 cents. The big level of resistance for Aussie 65.50. It clears that. There's a lot of blue sky above that. So look, buying Aussie on dips at the moment, especially risk continues bid. It certainly looks the favoured play in the currency space. Now, looking forward, now that we've got the war behind us, market now is starting to focus now on other things. What we have seen that's quite interesting in the last few days is that we've seen a lot of Fed members actually now starting to get a little bit dovish and talking about that they are actually open to potentially starting cutting rates again in the July meeting. Also had a lot of political pressure from Trump. Trump has come out saying that the Fed should be cutting rates aggressively, taking rates down as much as 2%. He says that there is no inflation, that Trump is that Powell is actually a moron for keeping rates so high, and it's hurting America. And that if he did see inflation later on, that he could raise rates again. But anyway, this is something that generally we never see. The Fed's supposed to be independent, so a lot of political pressure on the Fed from Trump. But yes, some Fed members are actually starting to get dovish. So it is going to be very interesting to see how we do go into the next Fed meeting in July. But the market is pricing in that the Fed will be cutting rates again, and maybe sooner. And again, that is not going to be that's a US dollar sell story. And yes, inflation data now is going to be a huge focus. So if that doesn't jump up on what's been happening with tariffs, no doubt the chorus for those rate cuts is going to get even bigger. Okay, so we are trading risk on at the moment. I imagine that's going to continue for the foreseeable future. Good luck with the trades, and we'll catch back in with you soon.